Hello everyone. I'm a good above average chess player. I was a member of English Chess Federation till 2018, but not anymore. Irrespective of it, I learned very important two things that helped me massively in stock market. Recently, I came across a related article that was published in moneycontrol.com, so I thought worth sharing with you guys. So, let's start. What are all those two? First one, when I was young, I used to play in various chess tournaments. Still, sometimes I do, but not very often. In that, the very first and the most significant difference that everyone will notice in playing the official tournaments versus playing the casual one was noting down all your moves in a piece of paper. There is a huge lesson in it for both traders and investors. If anyone is new to the game of chess, in all official chess tournaments, players have to note it down each of their move and the opponent's move. If they fail to do this, it is within the arbiter's right to disqualify or nullify the match result. When I first learned about this, it sounded scary and also not logical. Why would one have to lose a game simply because of not noting down the moves? Why should the past moves matter more than the current game? Within just a couple of games, I kind of found the answer. I mean, keeping game record allows one to scan back looking for clues to unlock the opponent's strategy or plan, or even we can formulate more effective our own strategy or plan from that. After 3-4 games, it became a subconscious habit for me for noting down every move I played. And the best part, keeping a record of moves helped me to reduce my mistakes and improved my winning rate. In the stock market, we can now draw many parallels between the chess game and trading or investing. Besides strategy, risk management, and planning, even the practice of noting down your moves mirrors the practice of trade journaling. Just like my younger myself was mad at the extra effort of journaling my moves, many traders are too lazy to journal their trades. They use the same rationale. Why should I bother with journaling? Isn't executing the trades and making profits are the only important goal? That's where we go wrong. Journaling trades helps to identify the strength and weakness of the strategies we use, and hence it will improve our trading setups accordingly. Basically, journaling holds us accountable to ourselves. Investing or trading in stock market is purely a logical activity. There is no place for emotions. But it's a human habit. Whenever there is a money involved decision making, it tends to become emotional. Journaling helps here as well. Keeping a record of trades helps to identify how many mistakes we made that were due to emotional triggers, and we can then figure out how we can address those issues in future. According to a research done by UK spread betting channel across 2 million traders globally between 2011 to 2021, over 80% of profitable traders study their previous trades. And an average trader's returns increases nearly 4% every year by just doing post-trade analytics. Also, as per Money Control and Anastrat, they have looked at the trade history of 1.5 lakh traders who registered on their platform, and they found that the top 3% profit makers were the one who studied their trades daily. And for the top 5% traders, trading hour ends at 5 pm, and between 4 pm to 5 pm, they dedicate themselves to study their trades and prepare themselves for the next day. In the first 3 months of dedicated post-trade analytics, traders see over 3% increase in their monthly performance. They have found that after 6 months, the top 10% traders made 30% lesser trades and 21% higher returns than usual. Most traders do not focus on post-trade analysis and avoid journaling. This is one of the underrated reasons why only 5% of the traders actually make profits in the trading and investing community. Without too much of any effort, trade journaling and post-trade analysis can empower all traders to improve their trading performance. That is the first takeaway. Then the second one, know your strength and work on those. In chess, there are 4 types of players: aggressive, defensive, tactical, and positional players. I don't want to bore you guys by explaining the chess terms, but just for info, I'm more of a defensive and positional player. In chess, I've let the opponent to attack and trap them with their mistakes. That's my strength and my natural instinct. But there are some times between 2015 to 2016, I tried being aggressive and tactical. Those were my bad timings in my chess career. My ECF chess rating crumbled like deck of cards. It took me at least 1 year to figure it out. Similarly, in stock market, I'm a very good bargain hunter, good in catching the falling knife and make strategy around it rather than going with a trend or flow. I know it's against the traditional, but at the end of the day, what's working for you, that's important. Defensive bargain hunting and catching the falling knife is working for me and I am comfortable with it and I can formulate a strategy around it. That's why if you see all my stock analysis in the channel is where bargain stocks at those times. But it doesn't mean it will work for everyone. For example, most people prefer long-term options trading, but I'm not at all comfortable with that. Anyway, I'm trying to learn those as well. Let's see how I'm getting it on. So that's the second takeaway. Everyone is unique. Know your strength and play in the stock market with respect to your strength. Don't play others' game. These were the two important trading or investing simple habits that can help to improve our overall returns in stock market. So that's all in this video. Hope you all got some useful information. Please consider subscribing to the channel and liking the video so it will help me beat the YouTube algorithm and also motivate me to do more. Please don't make any investigation based on this as I'm not a SEBI registered advisor. I am doing this for my and viewers educational purpose only. Thanks for watching.